there's with all the Fortune 500 companies and everyone's work visas and borders opening back up. I mean, there is a huge need for temporary housing, if you will, that isn't a hotel room.
Good morning, good afternoon, and good evening. My name is Drew Pearson. You are listening to the Pearson Perspective. This is a deep dive into the stories and mindsets of successful business operators and investors. Let's go have some fun. All right, man, I am really excited about today. I've got my good buddy here, Anthony, on. Anthony and I have been friends for probably 7 or 8 years now. We work together in Michigan, and he's really been a great buddy and really helped a lot with how I think about asset management, how I think about maintaining real estate long term. He's now gone on to start his own private equity investment company, and so I'm just really excited. Anthony, thanks so much for joining us today.
Thanks for having me, man. Appreciate the kind words. I'm excited too. This should just be like, you picking up the phone every couple of weeks and us chatting on the way to whatever it is we're doing.
That's it, man. I spend a lot of time in the car, and Anthony's one of my road buddies that I'll say hello to.
Hey, man, it works.
Yep. Well, Anthony, why don't you tell us a little bit kind of how you got started in commercial real estate, and then we'll kind of move into your new company now and what you're up to.
Yeah, sure. So I got into real estate kind of by default, almost, with not a whole bunch of planning. I went to Michigan for school. I played baseball there. I was getting ready to get drafted my senior year and broke my leg, right? Like 2 weeks before the draft. So it was like, oh crap, now what do I do? This baseball thing went down the drain pretty quick. And real estate was always kind of in the back of my mind, kind of a motivator, because I was living in these college campus houses, right? Everyone was paying $600-700 a month a bedroom to some dude that owned it and had the property free and clear for 30 years and was just making bank off of rent, right? So that was kind of the first kind of intrigue into real estate. And when everything happened, when baseball ended, essentially I met a former Michigan alum who was doing asset management and property management for a company called McKinley out of Ann Arbor. I shadowed him for a day just to see what it was like. And after the day ended, he's like, we're hiring for an asset management role on our multifamily side. You should just take an interview just to practice, because I've never interviewed before. I'm like, yeah, that's a great idea. He's like, you'll never get the job. They're looking for 5 to 7 years of experience. Cool. Well, I got the job. Those dummies gave it to me, right? And it was sink or swim. And that was kind of my first intro into commercial real estate, was asset management and property management for third-party receivership assets of multifamily assets. So you're talking the dogs with no money. So really learning on the ground level how these properties function, how to make them function when you don't have cash to pump into them. And I did that for three years, and then went and did the same thing, asset management and property management, for more your traditional commercial real estate assets. So multi-tenant office, retail, and industrial. And that lasted until about 2010. No, that's not right. 2015. I'm sorry. And then I joined the company that we met at, which was Permanis. Was pulled in to be kind of a limited partner there to run part of the portfolio, and ended up overseeing the operations of the entire portfolio, building the property management team. And then, right? And then we were equity backers for developers in various growth markets throughout the country. So that's where kind of the passion and prowess and everything came for the private equity investment part of it. And that's really where things separated. And I was like, okay, I don't want to do the property management stuff personally anymore. I want to focus on my own portfolio, raising private capital, and deploying it in assets that I'm confident in will produce. And that's essentially what happened and led me to find my own company, Dynasty Investment Partners, in 2021.
Man, that's awesome. What a great background. Kind of getting started when things were rough. I mean, back
Yeah,
in 2010, especially in Michigan, like people forget Detroit went bankrupt.
yeah,
I mean, it was almost like the last one to turn the lights off. You
right,
know, people didn't think the city was going to come back. It's
right.
pretty incredible.
It is. And
Well,
man, has it
before we
come
kind of
back.
get to where you're at now, yeah, and we're going to talk about that. I love
Sweet.
Detroit. I think it's a
Yeah,
great town.
yeah,
Before we kind of get into that, let's talk about you talk about receivership. Not everyone understands what receivership
sure.
is, especially today where real estate is viewed as like a bond, like what can go wrong.
Right.
You saw what can go wrong. So help
Yes.
explain what receivership is, and then some of those lessons you may have learned how to operate properties on a thin budget without a lot of cash.
Yeah. So receivership, to put it in a residential kind of lingo, is, when your home's facing foreclosure, right? So the owner of a retail asset in Menominee, Wisconsin, which, believe it or not, I was up there.
Mm-hmm.
Basically was over leveraged, underwater, in 2010, 11, 12, couldn't make his debt service payments, and the bank took it back. And in that interim period between the bank taking it back and actually foreclosing on the property, they appoint what's called a receiver, which is usually an individual
Mm-hmm.
court appointed receiver that is in charge of basically preserving the asset, not increasing the value, just making sure it doesn't get worse. And that receiver
Mm-hmm.
oftentimes appoints a third party asset management or property management company to really take care of it. Well, that's where McKinley stepped in, and McKinley made a huge uh, arm of the business that was solely based on managing receivership assets. So we would go in there and implement a strategy, and that strategy could vary depending on who the special servicer was, which was, during a receivership, the kind of intermediary lender that was keeping an eye on the asset and making sure things didn't get worse. Some special servicers were like, "You got nothing. You got no money. Figure it out. Make sure it doesn't get worse." And that,
Right.
unfortunately, that was the strategy. And with no money, making
Mm-hmm.
sure things don't get worse, that's a tough thing to do.
It's really hard.
That's a really tough thing to do.
Yeah.
But there were often times, and where McKinley really prided ourselves, where you got into a property where the borrower was just in over his head and didn't understand what he was doing. So we could go in there and put together a leasing strategy, put professional third party management in, um, and really increase the value by just simply paying attention. Real estate minds paying attention to an asset that just was fell into deferred maintenance, and you know, like I said, the bar
Mm-hmm.
was just in over his head and didn't know what he was doing.
Right. Right. That's really interesting. Well,
Yeah.
let's kind of fast forward till today. So we've started our own company now, Dynasty Investments.
Yep.
And man, I got to compliment you. Your website, your marketing, it is freaking professional, dude.
Yeah.
I
I
mean, I'm
have.
like a little embarrassed. I'm like, man, I need to kind of like talk to you about some stuff because it looks slick in a very good way.
Yes. Thank you. Well, I'm biased, but I think it looks great too. And I gotta get a lot of kudos to my business partner. His name's Riaz Sheriff. He's a residential agent here in the Metro Detroit area,
Mm,
and the website developer, um, and the website developer for sure was a contact through a contact of his. We interviewed quite a few people, and the guy that built our website was just, you know, he's up here, and everybody else is, can't even sniff the level he's on. And he built that from scratch. A lot of
yeah,
web developers will throw it into WordPress or whatever and just hope for the best. Not this guy.
right.
And then, yeah, I hope you met with our investor packet and graphic design guy, who was an introduction through
I did.
our property manager here in Detroit. He used to do a lot of stuff for Dan Gilbert's real estate company, Bedrock. So, yeah,
I've
just,
heard of him. Doesn't he own a
yeah.
basketball team or something too?
He owns a
Yeah.
basketball team. I'm originally from Cleveland, everyone. So he does own a basketball team, Cleveland Cavaliers. Him and
Yep.
LeBron don't get along anymore, but
Yep.
that's
Yep.
okay. That's okay.
Hey, man, you got one. You got one
We
already.
got one.
Well, let's talk about kind of okay. Your let's talk about your investment strategy. I know you kind of let's talk about why you love Detroit, some multifamily, and then kind of some of your newer strategies as we get to today.
Yeah, so Dynasty Investment Partners, we founded that in February of 2021 with the sole focus being providing passive multifamily investment opportunities for our investors. And in the first year, we acquired a $22 million portfolio, about 140 units, 9,000 square feet of retail, which was just a subsidiary use because it's ground floor retail with 58 multifamily units on top of it,
Mm-hmm.
and it's all in the city of Detroit. And why I love Detroit, why we love Detroit so much, is people outside of the state of Michigan, most people still outside of the state of Michigan, or certainly outside of the Midwest, don't understand this comeback story. And
Mm-hmm.
it's been going on for 10 years now, and it is still in its ramp up. I mean, you got 15 Fortune 500 companies here. Times just rated it one of the top places in the world to visit in 2022. Um, Times also ranked it
Wow.
as yeah. Times also ranked it as one of the top city for tech startup companies in 2022, just because of the
Mm-hmm.
amount of talent that is here in the state of Michigan. And it's also one of the top places, one of the top MSAs in the country for millennials to move here. And it's completely underbuilt for multifamily, completely underbuilt for multifamily, and it's
Mm-hmm.
underbuilt for single family homes, which obviously the two go somewhat hand in hand. Um, so you have the supply and demand issue. So we've had rents that have been increasing 10% year over year for the past 5 years, even through the pandemic. Um, and you have all of these incentives that the city of Detroit is providing developers or owners to rehab and refurbish and bring back into the time of glory days, a lot of these older, more dilapidated type of buildings that allows guys like us to go in to purchase an asset for let's call it 100K a door, and the property needs 20K a door into it. Well, we can get a tax abatement from the city and freeze taxes at their previous assessed value, and my cash flow is able to just jump for the next 10, 12 years because my taxes are frozen. So the city is involved, invested, for obvious reasons. And
Mm-hmm.
where places like Ann Arbor, I will call out Ann Arbor, that city is not developer friendly whatsoever. Detroit
Right.
understands the value of getting money in here, developers in here to help continue this resurgence. So there's a ton of opportunity here, and there's a ton of runway. Even though the resurgence has been going on for 10 plus years, there's a ton of runway left. So that's why we focused on multifamily from the jump, and why we love Detroit. And you and I can talk. It's a completely separate podcast. Maybe we should do about the food and bar scene here in
Yes.
Detroit and why I'm so
Yes.
passionate about that.
It is some great food up there, man. People are always like, "Did I lived in Ann Arbor for 3 years?" And people will say, "Well, how was the food? Like, was it terrible?" And I'm like, "It is a huge foodie town. Ann
Yeah,
Arbor and Detroit both. I was very, very impressed with."
yeah. So one of my JV
Well, man,
partners,
I'm
I got to hit one on the
yeah.
food thing one more time. So one of my JV partners
Go.
is
Let's do it.
is in Brooklyn. Okay, has lived in Brooklyn for
Mm-hmm.
25 years, and he loves Detroit. He has about 3 million square feet of industrial here. He loves Detroit so much where he'll take his wife and like brother-in-law and sister and meet in Detroit for like getaways, and being in
That's
Brooklyn, right?
awesome.
He says the food in Detroit and the
Uh
restaurants
huh.
in Detroit rival the best restaurants in Manhattan and Brooklyn, and I don't care what anybody says. So
It's bold, baby. I love
it
it.
is.
I
It
love it.
is.
Man, I'm so impressed. Everybody in real estate investments have known that multifamily has been the belle of the ball essentially for a decade. We've been staring down the pipe at like 5.5 cap pro formas for 5 years. And the fact that you've been able to find deals and create value for your investors in the last 18 months in multifamily, to me is so impressive. I just think it's awesome.
Thanks, man. I appreciate it. I don't know if we could have done it in other markets though than Detroit because
You couldn't
you
have.
could, right? Because there's so much incentive, like I mentioned, from the cities. And obviously when you're getting into these buildings that need so much work, there's a ton of upside once you put the work in
Hmm.
because rents are, you know, um, I'm trying to think, of everything that we own and have bought in the past 18 months, there isn't a building where the rental rates weren't at least 20% below market. So there's upside,
Wow.
there's incentives to improve the building from the city, and multifamily is needed. It's a 98% occupancy rate now in the city of Detroit for multifamily.
Yeah. That's
So
just awesome. But you still took the risk. You still did the hard work. It sounds like, oh, this is obvious. Well, it's not obvious. It's certainly not easy if it's obvious. I
it's
know you guys have put in a lot of hard work.
Yeah, it's not easy. It's stressful getting started
Yeah.
out, right? Those first deals are your most important
Yeah.
ones, right? So, but thank you. I
Hmm.
appreciate it. It's been fun. It's been fun.
Yeah. Yeah. It's if it's not fun, you're gonna wash out because it's
Uh-huh.
really hard this
Without a
first couple
doubt.
of years.
Without a doubt.
Um, when COVID hit, it really forced me to kind of reevaluate some things and get serious. And that's really when I really started diving into self storage, and we've had a little success there. How was kind of COVID for you? And then let's kind of talk about where you're going in addition to multifamily.
Yeah. So COVID, because of the undersupply here, COVID didn't have this huge adverse effect except on one asset of ours that is in Midtown Detroit, which is one of the top neighborhoods to be in the city of Detroit. It's just north of downtown. It's where Wayne State University is, and that's why there was that little bit of hiccup, right?
Mm-hmm.
Because during COVID, obviously colleges weren't around, so we did have
Mm-hmm.
you know quite a bit of occupancy drop off, but we acquired the asset actually at the tail end of COVID. So, the original developer and owner that we purchased it from saw occupancy dip from basically 97% down to 94%, which isn't a huge drop, right? There's plenty of people
Yeah,
around the country,
you can
right?
still pay your bills.
You can still pay your bills. And
Yeah.
now that Wayne State and the college, as soon as the college opened back up at 50% occupancy, we were 98% occupied again, and now we're 100% occupied with a 30-person waiting list, right? So we didn't. That was kind of
Wow.
one effect. The other one was more our workforce housing Class C asset. Obviously, those tenants got hit pretty hard with COVID. So we did have
Mm-hmm.
some increased delinquencies, but the state of Michigan and their SARA funds have saved the day a lot of times to help tenants get back on their feet, which is an application, explain your financial hardship to the state of Michigan, and hopefully it's able to halt evictions and get tenants back on their feet to
Mm-hmm.
to pay their back rent. So it takes 6 to 8 months to get a check. So, but hey, at least the landlords are getting paid because we got mortgages to pay too, right? That's what most people didn't
That's right,
understand
man.
during COVID is, oh, these landlords are so unfriendly and they got no hearts and no compassion for these people. It's like, listen, none of us were getting checks from the government to help us pay our commercial mortgages,
Mm-hmm.
right? So, and we have to pay our commercial mortgages
Right.
from
Or
people
your
paying
tax
rent
bill.
or your tax bill, none of that stuff, right? There were no breaks
Right.
for us. So, but we worked with our tenants. We did not have a lot of evictions at all. Um, and thankfully with, buying well located real estate, we rebounded pretty quick.
Mm-hmm. Well, man, that's great. We experienced some similar. We had some bumps, but certainly
Yeah,
got through it just fine.
sure.
Praise God.
Yeah.
Yeah, let's talk about. You mentioned you had some well-located real estate, and buying location is really important in real estate.
Mhm.
but so is the price that you pay. And there's a lot more decision making that goes into large investments than just location, location, location.
Right.
There's a price that is too high for the best located property. Conversely, there's a price that's low enough where I'll buy almost anything.
Yes.
And so help people kind of understand your decision making process. How do you view investments and when to go forward?
Yeah. So, I mean, we have a pretty thorough due diligence process even before we get under contract, right? I mean, number one is
Mm-hmm.
understanding the market that you're invested in, right? So we consider ourselves experts in Detroit and experts in, becoming experts in Florida, which I'm sure we'll get into, which is another market we're looking into. Um, and
Mm-hmm.
it is understanding that market and what the true value of that market is, right? I mean, in Midtown, for example, I'm not paying 180, $190,000 a door because that's Brush Park. That's another neighborhood. That's your high end, super ritzy neighborhood, right? You know,
Mm-hmm.
yeah, Brush Park is another huge up and coming area of Detroit that you have units trading at $200,000 plus a door, right? I'm not paying Brush Park prices for a Midtown asset, and then it, obviously understanding where debt is, right? Debt's caused a
Mm-hmm.
huge hiccup, as you know, in the past few months on the values of property, and sellers' expectations haven't adjusted for that yet. We've probably all seen it, right? Sellers still think that they can obtain
Mm-hmm.
pricing as if we were still able to get under 4% rates on debt, and it's not the case. I think there's going to be a lot of people in trouble that have purchased real estate over the last 6 months that have paid cap rates that are lower than the debt that they were able to obtain. Right? They're paying five caps and
I
their
agree.
interest rate's 5.75%. That doesn't work unless you're some huge REIT that is just looking for small margins and yield. But there's a lot of people that are going to be in trouble here
I
pretty
agree.
quickly.
I'm going to be really interested to see. Some people have a mandate to sell in 5 or 7 years, and if they bought it at a five and cap rates are a 7.5 in 5 years, what happens, and
Right?
it'll be interesting. I don't think there's going to be blood in the streets, but
No.
again, I think there's going to be some write down in values.
Oh, for sure. For sure there have to be write down in values.
Mm-hmm.
But it's
Yeah,
understanding the market. It's we both went to school. We both went to pretty prestigious schools, and
I
you can't.
didn't. You did though.
Yeah, you did. We went to good schools. We went to good schools. You can't. What we do, and I think this is true for all of real estate. Period. Is there's only a little bit you can learn in a classroom, right? All of this is experience. So you asked
Mm-hmm.
about, how we put our strategy together and how we identify what's a good potential acquisition and what's not. It's experience, and it's don't let this baby face fool you, right? You too. I mean, we're older than we look, and we've been doing this. A while, and it's
Mm-hmm.
through that experience. You can back of the napkin math and understand a market pretty quickly to know if it's an asset that's worth going after.
Yeah, that's great. We just recently had a good buddy of mine on who he's been really getting into Airbnb the last 5 or 6 years, and got to learn a ton about the business from him. But let's talk about kind of what you're doing with Airbnb units in Detroit,
Yep.
and then kind of where you hope to go and why this model kind of gets you excited.
Sure. So we just acquired our first. It's a 6 unit multifamily building in Brush Park, which I mentioned is, we paid 200K a unit for this 6 unit building, with a 10-year tax abatement. Some improvements had already been made, and it had previously been run as a Airbnb short term rental. And
Mm-hmm.
the beauty of that is I can literally increase the cash on cash returns I can give to my investors by 200% by operating an asset as a short term rental. There's just, um, you got 200, that building will run at 220, 250 a night for the average daily rate, and would rent as a traditional rental for, I don't know, 2 grand a month. So that's a huge delta. That's a huge delta.
Wow. Yeah.
Yes,
It's
yes,
2 to 3 times.
2 to 3 times, right? And there's Detroit's an attractive market because just like I mentioned, multifamily was undersupplied. Hotels here are a huge issue, especially downtown. There aren't enough
Hmm.
everyone's freaking out because it was announced that Detroit's getting the NFL draft in 2024, and everyone's like, "Oh my God, where the hell is everybody going to stay?" And I'm like, "I got Airbnbs for you that I'll jack the rates on, right?"
That's right,
It's just
baby. There
and
you go.
and there's two kind of what I have learned are kind of bulletproof markets for short-term rentals. It's your cities that have heavy business travel, Detroit, and your heavy
Hmm.
vacation towns, which is the Panhandle of Florida along the Emerald Coast that we have 3 homes under contract right now.
Sure.
But in Detroit, there's with all the Fortune 500 companies and everyone's work visas and borders opening back up. I mean, there is a huge need for temporary housing, if you will, that isn't a hotel room that a traveler can go
Hmm.
to and stay for 3, 4, 5 nights and have a true apartment and a kitchen and be able to work out of that office if they need to. And where we're buying these is located in an area where it's walking distance to all of the arenas for all of Detroit's sports teams. So you get the weekend traffic and the Detroit tourist. And during the week,
Hmm.
we're in walking distance to Henry Ford Hospital, Wayne State University, and Detroit Medical Center. So you can pull from those business travelers as well. Um, and it's a great business model. We've brought my wife in actually to handle the operations of our short-term rental assets, which allows us to really control expenses as well and not pay some third-party
Hmm.
manager some ridiculous fees to take care of it. So we're able to really increase cash flow, and of course it's attractive, right? I can say, hey, here's a
Yeah.
hey investor, here's a traditional 12-month lease multifamily asset. I can give you 6% cash on cash returns for over a 4-year period. Or here's a short-term rental asset that I can give you 14% cash on cash returns over a 4 or 5 year
Wow.
period. Which one are you going to invest in, right? I
Right.
just
Right.
so that's kind of the
Well,
go ahead.
I was gonna say, look, the returns are great. There's typically either more risk or more work involved in that.
Correct.
How are y'all thinking about processes? And I know your wife's kind of handling this, but as you grow the empire from 6 to 60 units in 4 markets, have
Mhm.
you thought about those processes? What I hear, house cleaning is such an issue. Like, how do you line up dependable, reliable cleaning services and all that?
Yeah, it is. You're right. It is more work, right? You're running. It's a hospitality business, right? I mean, you're running essentially
Bingo.
a hotel, so there's a lot more work that goes into it because you have heavier turnover. Um, Thankfully, we've found some really awesome third-party software systems and tech that's going to help automate a lot of this from the
Mm-hmm.
listings to smart pricing that actually you know will run algorithms that say, all right, your normal rate's 220. In 3 weeks, there's the Detroit Auto Show coming, and every Airbnb is booked,
Golly.
and the rents are $600 a night. So we're going to change all your listings on all the booking platforms, Booking.com, VRBO, Airbnb, and we're going to automatically change your rates for you, right? And
Wow.
it handles the booking. It automatically changes the lock codes and notifies cleaners when someone's going to be checking in and when they're going to be leaving. So a lot of it is if you're finding the right systems and you understand tech and you know this,
Mm-hmm.
there's this
Mm-hmm.
with real estate today. No matter, I don't care what the asset class is, if you're not integrating tech, you're falling behind the 8 ball, right? You're becoming a dinosaur very
Amen.
fast. So a lot of it is tech
Amen to that.
integration and maintenance, having a maintenance team and having a cleaning team. And what I mean
Mm-hmm.
by team is you can't just rely on one company or one person, right? You have to have a backup to your backup to your backup,
Mm-hmm.
and you have to hold them to high standards. And we're targeting. Thankfully, we're not the only. We're not geniuses. We're not the only people that have figured out that Detroit's an unbelievable market for Airbnb. So a lot of a lot of individuals who have been in the hospitality business for years on the operations side have started their own companies, whether that be cleaning or concierge services. So it's partnering with those people
Hmm.
to handle those type of duties. And the beauty about cleaning, the guests pay for it, right?
Yeah,
So
it's beautiful. It's a great model. I mean,
yeah,
these conversations get me fired up. I'm like, man, I want to go buy some freaking Airbnbs. Let's do
right,
it.
right.
Um,
The
I should.
biggest caution I'll give people is there's this huge sweeping wave across the country, right, where local residents are trying to get their local municipalities involved to ban or limit Airbnbs. But the key that people need to
Mhm.
understand is that is in residential zoned districts, right? So just like, I don't want to be raising my kids in my neighborhood with 10 Airbnbs on the street, right? Or short-term rentals on the street.
Mhm.
It's finding Airbnbs or short-term rental assets in areas of whatever market you're interested in that are insulated and protected from any of those type of restrictions that might come down the road. That's why we're buying, like,
Mhm.
our 6 unit building is a commercial business zone district, right? It's never going to be touched. We're good as far as our business model. In Florida, along the
Mhm.
Emerald Coast on 30A, it's in communities where the association and Walton County's ordinance and the condo bylaws say nobody can ever limit the duration of a stay if you're renting out your house. Great.
Right.
HOAs can be a deterrent, but they can also add protection. And in some markets like Florida, which is what I'm all chips in on the table right now, it provides protection.
And that's really insightful. 30A is awesome. I mean, all my buddies go down there at least once a year. We were down there a few months ago. I
Yeah.
know people from Michigan love some Florida. Come February, come March.
Yep.
It's a jam up. It's a jam up place. It's actually too crowded for me. I'm like,
Yeah.
I want to be around less people, not more people.
Sure.
But that's a
Sure.
good problem to have if you own real estate.
It is. It is. And so we went down there for the first time with my parents about 9 years ago. And
Hmm.
We were just in Destin and Sandestin on, closer to
Yep.
Pensacola than Panama City. And it was awesome, right? We're like, oh, I didn't know the panhandle of Florida had white sand beaches and like emerald green Caribbean like waters. Like, this is amazing. We had a blast. We went there 2 more times before we had kids and then stopped. My parents kept going 2, 3 times a year and kept saying, "Oh my God, there's this new town. It's called Seaside, Watercolor, and Rosemary
Hmm.
Beach. You got to come down here. It's amazing. It's so much different than Destin. It's less commercialized. It's more relaxed." And so we finally went in June with the whole family, including my parents. I was just blown away with what is going on down there.
Hmm.
Land along 30A is getting close to being completely eaten up. So there's all this development in land that's selling and being commercialized heading north off the coast. There's no signs of
Hmm.
stopping. And the
Hmm.
infrastructure down there is built to invest in short-term rentals, but nobody's doing it. And it's amazing. I was just on the phone with a potential high net worth investor yesterday who understands that too. There's such an opportunity to really build a sizable investment portfolio down there. But most of the folks that own houses down there have it as their vacation home. It's their second home. They rent it out for 50% of the year, and they're happy because they're making a little bit of cash flow, and they're
Right.
essentially getting a vacation home for free. There's not a lot of folks down there that are
Right.
really looking at this and being like, you know what? If we shoot to maximize occupancy and maximize our daily rates, you're looking at stupid returns and a stupid opportunity here. And the opportunity is
Yep.
there. We have 3 homes under contract right now. Last time I talked to you, we had 2. Um, we have
I
three
know.
as
I
of
heard that. I
yeah,
like that,
3 as
man.
of
We're moving.
yesterday. We're moving, and it's just I think that in the next 6 months, there's a sweet spot when it comes to investing in single family homes, especially high end luxury vacation homes, because at the price points along 30A that are, any nice house that people are going to want to stay at is north of 2 million bucks, and you have
Right.
buyer hesitancy, and they're being less aggressive because a lot of folks are expecting rates to drop back down, which isn't going to happen. We were at historic lows for a reason, because they are going to be historic, and we'll read about them in history books soon.
Yep,
And
I agree.
sellers are freaking out. Sellers are used to seeing houses, their neighbor put a house on the market and have 10 offers in 3 days. Well, now they're sitting for 2, 3 weeks, and sellers are freaking out. And we've been able
Yeah,
to get all three of these homes for 20, 25% discounts compared to their market value. So,
man, that's
all my,
incredible.
yeah. So I'm pumped about the 30A opportunities.
I think you're dead on that. You are a sophisticated, or to be a sophisticated operator in this space, and you're competing against people who barely think about this.
Right.
It's their second home, and this is not a business for them,
Right.
which to me feels like a place where you can outperform, because the bar is low, and I like low bars.
Hmm.
So
Yeah.
I think you're dead on about that.
Thanks. I hope so. Right. I'm pretty confident we are too.
Yeah,
It's,
yeah, yeah.
the other great thing there I want to just touch on is the ability to get financing. Right.
Mm,
So that 30A is built for vacations. Right. And it's been like that for years now. And I can go down there and go to a lender and say, this is what I'm trying to do. These are going to be short-term rental assets. And they understand it. They're underwriting the business when they go to put a loan on a property. They're valuing the business, not just a market comp on the value of the actual home, right? So that changes
oh
things
boy, that's so
dramatically
huge.
with the amount of debt you're able to
God,
get, right? Not only that, so that's a key piece, right? But
yes.
now now the appraiser is doing the same thing. He's still doing a market comp approach, but they're putting a heavier onus on
Emphasis on
the
the income.
business, right? I can't do that up north.
Hmm.
Lenders have
Yeah.
not gotten aggressive, or even come out of their comfort zone to understand that. So if I want to grab a short-term rental unit here in Detroit, I know what it's going to produce from a cash flow perspective. But the lenders and appraisers don't care. They're gonna throw the business model out the window and underwrite it as a traditional multifamily building. And guess what? Now I can't get debt service coverage ratios. So
Hmm.
the debt that I'm able to
Man,
get along 30A is huge. It's huge.
so what you're essentially telling us is kind of the future of Airbnbs, because it is not spread nationwide. It's not even over in Louisiana yet. Even
No.
in tourist towns like New Orleans, appraisers aren't giving Airbnb owners credit for the business model.
Yep.
And you're saying, look, we are getting credit, or some credit for us, and that's massive. Because what I
Huge.
think is going to happen, I've changed my mind on this, and I think this is the truth. Talking to people like you, is that people are going to start realizing that Airbnb is a real business, that these cap rates are going to start coming down. And if you're buying at a 15 cap now, you're going to be able to trade these things at an 8 cap in 24 months with real P&Ls, or maybe 5 years with real P&Ls. And there's going to be a lot of upside for guys like you who are taking the initial risk and proving out this model.
Right. I mean, it's already happening. There's not a big I guess operator pool that's looking at trading short-term rental assets on cap rates, but they're there. And if you look at,
It's coming.
it's coming. If you look at 30A, for example, the cap rates are trading, or can trade, between like a 4 and a 7% clip. Okay. We're getting into these homes at like 9.5, 10% cap rates, essentially.
Hmm.
And there's also,
Yeah.
and not even you don't even take into account, the year over year appreciation of these homes. But just looking at the business
Yeah.
model, if we have a portfolio, there's already REITs that are out there that are looking to snatch up large portfolios and going to pay crazy aggressive cap rates. So if we hit this right and the strategy comes to fruition of really building out a portfolio, I'm going to be a very happy guy, and so are all of my investors.
Yeah. No, I think you're on the right track. I mean, there's no doubt. Um, the next biggest problem I think you're going to have is the people and the process side of the business. I know you
Yep.
guys are still a pretty relatively lean team.
Hmm.
Have you thought about making these next hires? How do you start folding in assets from across the country? How are you
Sure.
thinking about this? Because it's something it challenges me daily. I just brought in a new head of ops, and the people component is real when you're running businesses.
It is. It is. And have our next hire is constantly in the back of my mind, and I struggle with exactly who that's going to be. Is it going to be more of a CFO type accounting, financially mind driven, or is it going to be more of an operational driven type mind? And I struggle with that. And before we got down to 30A, it was more I need someone to really direct the operations of this business and what we're doing. But it's I think that who you partner with, whether that be within your company on a hire or outside of your company, um, it can really change your growth trajectory of your business. And down
No
in
doubt.
Florida, we've found an unbelievable true partner that is an extremely experienced, savvy, growth-minded, all-woman-owned short-term rental management company that has been doing this for years. Uh, the 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 head of the company, the two principals are high net worth that have been looking to grow their own portfolio of investment properties. And we went down and we met with them and we're like, okay, here's what we're trying to do. They understood it. They're like, oh, okay, you're trying to really juice occupancy. Like we can have fun with this. And we understood that, okay, you want
Mm-hmm.
to own a portfolio one day. How do we make this work in tandem? Well, now my property
Mm-hmm.
management company is willing to sign on loans because of their liquidity
Mm.
and is investing a significant amount of their own personal money into these deals. If you want to talk about a
So they're going to be
vested
run right. Wow.
if you want to talk about a vested interest, we've found that. And we talked to and my wife Nicole, found and talked to six different management firms down there. And it's not even close. There's the one we chose and that we're partnering with is just phenomenal. So I know that doesn't answer your question about the internal hires.
No, it does.
Um,
No, it does.
yeah,
It sounds like you're off to the races. Like it's time to start sprinting in Florida. It's time to get after it.
yeah, and that's what we're raising 2.3 million right now for the three first homes in Florida. I know I sent you materials and you've probably looked at it and that's how you
Mm-hmm.
got so you're like, ooh, these
Mm-hmm.
packets are sexy. Who does these for you, right?
They are. They look good. They
Yeah,
look good.
thanks. But what I've been telling investors is, listen, my goal internally is 10 million in equity and 15 homes by the end of the year. And that is very doable. That is very doable. So yeah, we're raising
Mm-hmm.
2.3 now, but as far as I'm concerned, my mindset is almost to the point where it's like I have a 30A blind fund that I'm raising for, and I need $10 million. Because if we had that
Man, that's
money
awesome.
today, we'd put 15 homes under contract and they'd produce at north of 15% cash on cash returns. And now we have a partner down there that I know is going to be take care of those things because they own them. They're part owners in it. So,
That's right. That's right. And they own the management. How
yep.
much fun is it to feel like you found a sweet spot? Like you just hit the ball on the sweet spot of the bat and you're just, man, it feels good.
It feels really good. It's kind of a my first question, and you and I know because we're conservative when it comes to investing, and we try to pick apart and figure out like what is wrong with this,
Mm-hmm.
what is wrong with how I'm thinking,
Mm-hmm.
and it was at first, especially all of June, it was this is too good to be true. How am I, dummy me who wouldn't have gotten into Michigan if I couldn't hit or throw a ball? How am I the only one that's figuring this out?
Mm-hmm.
Because everyone we've talked to is like, wow,
Mm-hmm.
this is so innovative. We're not, and it does feel good. And I think it's because it's,
Yeah.
75% of the people that own homes down there and vacation down there from your neck of the woods. They're from the southern states. And, it's It's great. It's
Yep.
gravy. They get a little cash from having their vacation homes. It's not even a thought in their mind to really make this a business. So,
Right. No, I know why it's you're kind of playing in a sweet spot. I mean, there's not a lot of folks who want to drop $2.5 million on an Airbnb for a business.
mhm.
Most people down there are high net worth and they just want it for their family. They don't want someone coming and staying in their house.
Yep.
That's not why we got this. And so you're just kind of playing this like middle market, and
Yep.
that's where returns are. It's where
Yeah.
people aren't thinking or people aren't looking. Um, but it's when you go down there, it's obvious. It's popular. It's great. It's a
It
great
is.
place in the world.
It's cool. It's really exciting.
Yeah, it really is. All right, I got a couple more questions for you, and then we can kind of wrap it up.
Let's go.
I want to talk a little bit about, maybe what advice you would have given yourself 5 or 10 years ago.
5 or 10 years ago. Um, 5 years ago, I would 5 years ago would have been 2017. I would have told myself that be a little bit more confident in your experience and your knowledge in this business. Because when I started Dynasty, um, I'm now kicking myself that I didn't do it sooner, right? It was kind of this, 5 years ago, it was this, I'm not smart enough. I don't know enough. I don't have enough experience to go out on my own, even though I know that's what I want to do. And you know what? You know this now too. We should have done it earlier. We were
Mm-hmm.
capable. And you
Mm-hmm.
think if I had a 5 year head start, if I was 5 years further than where I am today at 34 years old, how cool will that be? Because these next 5 years are going to be pretty exciting. So I think
They are.
yeah, and for you too, man, because what you're doing is pretty freaking incredible. But I think it's really having that confidence, having the um, yeah, just knowing that the experience that I had was fortunate enough and literally fell into, like, a company had no business hiring me out of school and did. That experience that I fell into, I had no business having, no business having, and I had this unbelievable experience, um, that was kind of beyond my years of in my 20s, and I should have just taken the jump. I should have started this on my own sooner. Um, that would
Mm-hmm.
probably be my biggest advice to myself 5 years ago.
That's good
Um,
advice.
yeah,
Yeah, well, I mean, I just know we've been buddies for a long time, and I mean, you're a collegiate athlete, so I don't think anybody would say you didn't have confidence, but I can definitely tell just a huge jump in your confidence in the last year or two as these things have really started to shape out, which has been a ton of fun, and I think probably folks would say something similar about me too, kind of as we've grown and learned and gained some of that experience where the buck stops with us, it changes everything.
for sure. Well, you hit without a doubt. I mean, you hit the nail on the head, right? It's experience. We're not going to gain that
Mm-hmm.
confidence or know what we're capable of unless we actually jump in and freaking do it. And now
Right.
we don't even have that much experience still, but look what we're doing. It's
Right.
pretty cool. It's pretty
Right.
cool. We're
It's
surprised
incredible. I
every
mean,
time you and I hop on the phone. It's like I'm surprised, not surprised, but just like a holy look what Drew's doing, and I know you're like that with what I'm doing. It's just, man, why didn't we do this sooner?
absolutely. Yeah. Yeah. Well, I'm just thankful that we're here now, and at
Yeah,
40 in 5 more years or 4 more years, it's going to be like, wow, it's been a good run. Hopefully, it's going to be a good run,
right.
and if it's not, we're going to figure it out. I mean, what no one ever
Exactly.
tells you is business ownership is just about making decisions and making the best decisions that you can, and having the confidence to know that we're going to get out of this.
Right.
And I've made plenty of mistakes, but that's what we're going to do. We're going to figure it out, and we're going to get through it together.
Sure. Without a doubt. Without a doubt. And that's how you learn. And that's just more experience you can put in your tool
That's it,
belt,
man.
right?
That's it. That's it. Well, man, this has been a ton of fun today,
Yeah,
Anthony. Thanks for coming on. I've learned a
sure.
ton. Hopefully, I'll be calling you and staying at some of your Airbnbs down in Florida
Yes, sir.
in a couple of months.
You just let me know. You just
All right, buddy. Have a great day.
invest in a deal. You can use it for a week a year, man.
There you go, man. Sign me up. All right.
All right. All right. Thanks, man. It's been super fun. Would love to do it again.
I would really appreciate it if you'd leave us a review on Spotify, Apple, or anywhere you're listening or watching to this show. Thanks so much for joining us on this audio adventure. Let's go have some fun.